The UK's most successful savings product. Premium bonds are a way of putting money aside and having no fear that that money is going to be taken away from you, but also having no guarantee that you will actually make any money. So then why is the premium bonds one of the UK's most successful savings product, with millions of Britons putting their money aside into premium bonds and hundreds of thousands never even gaining a single penny? In this video, I'm going to go through what premium bonds are, how they work, how much I've invested into them, and whether or not it is the right product for you. So premium bonds are offered by a group called NS&I, and they are fully backed by the UK government. Essentially what they do is put your money into government bonds. However, instead of giving the interest back fairly to each individual who has invested, they don't do that. They instead make a lottery out of it, meaning that a very few will win very big, some will win medium prizes, and a lot of you will win absolutely nothing. However, even though it is based on luck, millions of Britons still put a lot of their money into premium bonds. So NS&I actually offers other products, but their premium bonds is by far the most popular, and that's what we're going to talk about in this video. So essentially they say that it is a fun way of saving with the chance to win tax-free prizes each month. So it used to be that premium bonds were very valued because of their tax-free nature. Until quite recently, we didn't have our personal savings allowance, which for a basic rate taxpayer stands at £1,000, where you can earn £1,000 in terms of interest from your savings account without having to start paying tax. £1,000 in interest is a lot, especially for a basic rate taxpayer. So basically that really means that you can go with any bank you want, and even if they pay a high rate of interest, you're not going to be paying tax on that interest unless you make £100, which is almost impossible in today's climate. However, with the recent increases in interest rates, premium bonds are becoming more attractive because they pay out a higher overall interest. So at a glance, the odds of winning any money in the premium bond is 24,000 to 1 for every £1 bond. I know most of you aren't mathematicians and most of us humans can't actually comprehend these numbers, but 24,000 to 1 is a very, very low chance. Your chance of many other things happening that seem unlikely is higher than actually winning these bonds. But anyway, the annual interest rate has been increased and now it's 3.3% as an annual prize fund rate. Essentially, they're paying 3.3% interest on all the money that's put into these bonds, and then they divide it between the different winners, with some winners getting a lot and some winners getting nothing. And I'm going to show you that in a bit. So all these prizes are tax-free. This used to be a huge benefit before. Like I just said before, we have our personal allowance, so the tax-free nature isn't that appealing anymore. However, if you're an additional rate taxpayer and you have zero personal allowance, any money made through premium bonds is absolutely tax-free, meaning that you're just accumulating free money. It's also worth to note that the maximum amount that you can deposit into your premium bonds is 50,000. So unlike your ISA limit, which is £20,000 per year of actually depositing, the ISA can go above £20,000 in any given year. However, there is a hard limit on these bonds, meaning that you can't deposit any more than 50,000. If you even win £25, that cannot be kept in your account because the absolute limit, ceiling limit, is £50,000. Essentially, this stops people with a lot of money putting a lot of money in and increasing their chance of winning, and also the tax-free benefit of putting more in will be disproportionately higher to those with higher incomes. A few things to know about premium bonds. So you should not put your money into premium bonds if you want a regular income. Like I said, some months you're likely to receive nothing, some months you might receive something. With average luck, you're honestly better off putting your money into something else. Right now, some current accounts are giving interest of 3% quite easily, so you can actually put your money in that and get guaranteed money. Here, if you have normal luck or below average luck, you're probably going to end up earning a lot less than the 3.3%, most likely a lot less than that. So if you're looking for guaranteed returns, like I said, absolutely premium bonds does not do that. If you're concerned about inflation, you should also not invest in premium bonds because the interest rate is always going to be under inflation, and even if the interest rate was higher, like I said, with average luck, you're likely not to get the full amount. Also, if you want to save jointly with someone, you can't do that because premium bonds is for each individual. But I guess if you are in a partnership, you both can have premium bonds, giving you £100,000 of deposit limit. So let's go through the prize amounts that the premium bond gives and the odds of winning those amounts. So let's start from the bottom. So the odds of winning £0, so that's absolutely nothing, is virtually certain, and there is basically unlimited amount of £0 prizes. So if you're into winning nothing, could be a great platform for you. £25, there is actually 2,140,000 prizes of £25, which is actually getting higher. It used to be a lot less than that. So there's 1 in 24,000 chance that you will win £25 with every £1 bond you have. So if you put in maybe £10, £20, even £100, the odds of winning stay very, very low. Really, if you want to put money into these premium bonds, you're looking at least a few thousand. Otherwise, the chances of winning are very, very slim, and you're much better off putting your money into a bank account. So after this, we're going to be talking about that and why I think it is not a great idea to actually put money into premium bonds. So £50, there's 1.4 million prizes of that, which is still, again, quite high. 1 in 41,000 chance to win that. £100 prizes, again, it's 1.4 million, and you have 1 in 82,000 to win that. As you can see, the chances of winning get lower and lower as the price goes up. So £500, which is like something where you'll be happy about receiving per month if you had good luck. There's about 40,000 of those, and it's 1 in 2 million chance of winning that. £1,000 prizes, you're getting to the big money here. 13,220 prizes available, 1 in 7 million. And then you have £5,000, which is given to around 1,200 people, 1 in 50 million chance. £10,000 prize, which I'd be very happy to receive, actually absolute tax free. I'd save that for a house deposit or filling up my ISA next year. That's 622 prizes, and that's a chance of 1 in 113 million. The £25,000 prize, again, that is a very nice prize, 249 of those. To me, it kind of sounds like 250 people are going to win in the entire UK, and it sounds like I have a chance, but statistically speaking, that's 1 in 275 million chance. That's like one person in almost the entire population of the United States of America to win a prize of 25,000, which is not going to really happen. £50,000 prize, there's 124 of those, and that's 1 in 640 million. So that's like the population of most of Europe, and you have 1 in those chance of winning. So 100,000 prize, which is honestly life-saving. If I received 100 million in tax-free amounts, I would just put it all into investing, and I think that would give me a nice income. 62 people win that, which again sounds like quite a lot, but there's 1 in 2 billion to win that. So that's like saying 4 people in the entire world would win one of these prizes. And the last is an absolute jackpot, a £1 million prize. Previously, there was only one of these prizes, but now there's 2, and that's 1 in 60 billion chance of winning that. To put that into context, that's less than 1 person in the entire world. Actually, it's about 13% of a human being in the entire world chance of winning that. So here's a calculation based on the current prize fund. If you have £100 saved in premium bonds, the median average winnings, so the median average is like taking the average, and then the median will be the middle amount of people, if that makes sense, but I'm not going to get into statistics. The median average of winning anything with £100 invested is nothing. That's the equivalent prize rate of 0. With £1,000, the median average winnings is again nothing, with an equivalent prize of 0%. With £10,000, the median average winnings per year is £225, which is actually ridiculous if you ask me, with the equivalent prize rate being 2.25%. With £25,000 invested into premium bonds, the median average winnings is only £625, with an equivalent prize rate of 2.5%. With the maximum amount, £50,000, the median average winnings is £1,275, with an equivalent price rate of only 2.55%. So you can see, going from 10,000 to 50,000, you're not really increasing your equivalent price rate too much. Of course, there's more statistics that go into that, and you can see that the median average winnings is considerably higher than that. But then again, this is not a statistics and analysis channel. The chances of winning anything through premium bonds is very low, but people still save into premium bonds. In fact, people are crazy in the UK about premium bonds, and this is where I have to say that it is honestly probably a lot better to put your money into a bank account, because at least with regular interest, you can start seeing the compounding effect maybe after 50 years. As sad as that sounds, any type of savings account is never going to have a lot of interest. It's never going to be comparable to the stock market, where you can see compound interest working in about 20 years. With savings, it's probably going to be around 50 years, and most people will not actually see that compounding because they're going to take out the money. But essentially, the reason why savings account offer a lot less interest is because of the security. You can't actually lose your money in savings. In the UK, most of these savings accounts are FSCS regulated, meaning that they are backed up insurance-wise up to £85,000. The premium bonds are completely backed up. They don't even need FSCS security because they are backed up by the UK government. Unless the UK government dissolves into nothing, you are going to be fine. Of course, if that happens, everywhere else is probably not going to be amazing either. So I wouldn't recommend putting money into a premium bond, but sometimes it does make sense. For example, if you are an additional rate taxpayer, any gains that you do earn from that are completely tax-free. The second thing I would say is that if you have quite a few lots of money every everywhere else and you want to put some in premium bonds because you like the idea that it's a lottery. In this regard, it does kind of make sense because as a lottery player, you might be buying a ticket and losing that money. However, with premium bonds, you don't lose money. You just lose the potential amount that you can get if you had invested your money into something else. For example, £1,000, you can invest that into yourself. You can become a lot better at a specific skill and you can make a lot more money than that. Or even £1,000 in stock market or whatever. It's better than putting it into premium bonds where you're literally going to be earning almost nothing. And the average person in the UK doesn't even have £1,000 to really save. So they put it into premium bonds and get absolutely nothing back, which is a bit sad. But anyway, let's go through how much I have in premium bonds and why I've got this amount. So currently I have £7,340 in premium bonds, and the way I use my premium bonds is more as an emergency fund, and currently I am building this up and I am thinking about kind of maybe potentially maximizing this, putting £50,000 in slowly as a way of saving for a house deposit. For me, I've kind of tried to rationalize it and saying that, yeah, if I want to buy a house, I'm going to need around £50,000. I can put that into the stock market. However, if I'm going to need it in the short term, probably 2 years. If the stock market dips, then I can't really pull that money out, so I'm going to need to put it into at least a savings account. Thinking of other savings accounts, they're not paying that much. 3% interest isn't that much. I'd rather actually just take my chances and see how much premium bonds give out. If worse comes to worse and I don't make money month to month to month, I can just take out the premium bonds and put them into a savings account. For me, it's not too bad. I've already received some prizes which I'm really happy about, and I've already beat the amount that I would have gotten from a savings account. So for me, it just makes sense to keep them in premium bonds. Obviously, as a person who's very interested in personal finance, it doesn't really make sense, but you know what? I never do things that make sense for me, so don't necessarily follow the things I do, but I think the advice I give sometimes is sound. What's really weird about this app is that you can literally just check your balance, and then they have another app for the prize checking, which I'm going to show you now. So April's draw is in 4 days, so I'm very excited to see what I win then, but until then, let me go through what I've won so far and whether or not I'm happy with my particular earnings based on my luck. So I put in money in December 2022, so January of this year 2023 was actually my first prize, and I won £50, which I was extremely happy about. At that time I only had £4,000 in it, so actually that is more than average luck. I've always, touch wood, been kind of lucky, so I guess £50 is quite good. The next month in February I received £25, which I was happy about. Again, making £75 of a £4,000 investment is not bad at all in 2 months. If you think about it, that's an annual rate of 1.8%. At that time in February, the prize rate was a lot lower. I think it was 2.something%. So I was already happy with the amount I earned, and on top of that, it was tax-free. On March, I got very lucky. I got £100. So already I'm making £175 of a £5,000-ish investment. I was very happy, and I honestly thought that premium bonds are not too bad given my luck. But then last month in April, I received nothing. So it is what it is at the end of the day. If I continue not to keep making money, I might be tempted to take the money out. But for me, that is how I'm using premium bonds. And make sure to check out some of my other videos, and I will see you in the next video.